From CRI Simple Numbers, this is Profitability Playbook, the Simple Numbers Podcast, a podcast for those championing market growth and anchoring the nation's economy, small businesses, and entrepreneurs.
Hey there. Welcome to another episode of the Simple Numbers Profitability Playbook Podcast. I'm Mike Maxim. That's Brandon Gray. And we're back, baby. How's your week, man?
A lot of basketball, but it was really good. So we had our county tournament, which is, in small towns and small communities, always really fun because then, the entire community is there and all the neighboring communities, pretty much all the schools in the county, right? And packed out gymnasium for a few nights, and it was really, really, really cool to see it, be a part of it. How about for you?
Yeah, busy. Got a lot of stuff done around the house, all that fun stuff.
Yeah.
That's always that's a win at our age.
Yeah.
Like, it's got stuff done around the house. I'm so productive. It went fast though, like real fast.
Oh, yeah.
Weekend.
Yeah, it moved quickly.
But hey, I know last week, man, we announced the Simple Numbers Summit taking place.
Sir.
And I through
Excited about that.
That's going to be great.
And let me tell you something, we are getting some traction on it.
Yeah.
I cannot believe it. It got announced, and I'm nervous now about the venue.
Hey, we'll fill it out and then put you on a waiting list, I guess.
Cowboy Stadium is next. We'll
Let's
call
go for
Jerry up. I'll call Jerry up. Be like, hey, look, you've been breaking my heart for a long time, and it's time you pay up and to let us have a Cowboy Stadium. So AT&T Stadium. All right. So today we are going to be discussing the 100 company model. Haven't done it in a while, but we got the data for 100 companies through November, and we will be discussing it. So Brandon, why don't you kick us off?
This is a fun one. I've been looking forward to it for about 2 weeks now once we finalize the data. So here's kind of the deal. When you look at it on the surface, we are seeing an uptick, which is surprising. Whenever you kind of go, all right, we're seeing progress. For a lot of folks, that's surprising. It is for me because just talking to clients and what have you, you don't feel it, you might say. You don't necessarily hear it and see it on calls. And so when you see the uptick, and it's not massive uptick. I mean, we're just talking about a little bit of a bump in momentum for the last 3 months, which I would call a trend. You got to dig a little deeper and kind of go, okay, why? If your gut doesn't match the numbers, and this is true for your business as well, when your gut doesn't match the numbers, you got to dig into it and kind of go, okay, is there an anomaly? Is there something going on that's shifting and changing it? And so we dove into what was driving the uptick. And so, yes, there is an uptick. Is it real? Is it across the board? Don't think so. So we're going to go into why that's the case, why it's both a yes and a no as you look at the increase. So Mike, what are you experiencing as you're sitting on calls, running calls and what have you? Is it, hey, things are great, we're moving forward, or is it more of, a little concerned?
I don't think it's much concern is that the momentum is not there. There's not a ton of it. And I'm not saying that's for everybody. I'm just saying that a little bit of revenue growth here, got some things in the works, the phone might be ringing, but there's no real, man, we're about to tear it up. There's none of that. And by the way, a lot of holding steady on everything else. Like a lot of people are like, not comfortable adding labor, watching every dime, that's going in and out of the business. Yeah. So I know you said there's a little bit of an uptick, and yes, there is maybe some in the broader economy. Of course, some industries are going to feel it, but I think right now, if you're a small business, it's not rainbows and unicorns for sure.
So here's why we see our feelings a little bit different than the numbers. We dove into the model, broke it out into performance by category. Okay, so we're going to call the ones that are moving forward growers and the ones that are challenged as decliners. 32 of the 100 companies are in the growers bracket. And of those 32, almost every one of them is above $10 million in top line. Okay, so examples in that grower bucket would be home and commercial services. And we've talked about that before. If the kitchen sink is clogged, you got to fix it. If a tree's about to fall on the house, you got to cut it down. You don't have a lot of choice. They are not discretionary spends. Software and IT are also in that bucket. Seeing some software companies really doing well. Of course, the AI buzz is out there and what have you. Cybersecurity for a lot of folks is still really strong. So back to some degree, software is not always a necessity, but in the current environment, it is. Back to that necessity component. The ones that are challenged, the decliners. So that was 68 companies in the model. Retail. I know Q4 there was some pretty good retail earnings from some of the larger retailers, but what we're seeing in our client base is it's still really a challenge. Wholesale, still a challenge. Professional services, think everything from marketing to coaching, anything from an advisory role or what have you there. Financial and real estate, all of those are still in that tough bucket, to try to move the needle. So I'll give you some idea. So here's kind of the thing when you look at the two different buckets. It's not so much right now about how you do things. I'm not going to say it's not important, because it is, but what you do right now is more important than how you do it. You can be the best ran marketing company. It's a really tough marketplace. You can be the best ran financial, mortgage broker company. It's a really tough marketplace. You can be a mediocre ran home services company, and you're probably doing okay, because the market and the consumer spending is just really driving that, perhaps. So I'll give you a few details around these. But before I do, Mike, any thoughts on those two different buckets?
Yeah, I feel everyone right now, it needs to be like a marketing company. And I feel like that's where the fight is. We've talked about it before. Greg Crabtree said it. You said it. We have it hanging on the wall. It's going to be a street fight economy. And everyone right now is fighting for market share amongst very little market growth.
Mm-hmm. Right.
And that is where the battle is at. You see really good, like, people right now, I guarantee you show me a company that's killing it is a company that is outdoing you in the sales and marketing front in terms of their activity out there. And so everyone, like, what did Greg say? What were we doing the other day? Was it another? Oh, we were doing the webinar. We were doing this big webinar. It was crazy. Everybody was listening. We had like 800 people sign up. We had like 400 people attend. Greg called it the participation trophy economy. And so now you got to fight it out, because again, very little market growth, but you got to grab market share.
Exactly.
That's a different fight. And we've had market growth with endless amounts of QE in the economy. So, all right, sorry. There you go. That's my take.
Good stuff. We're going to talk a little bit more about marketing as it relates to these different groups here in just a second. So the growers, the thing that we're looking at with them is gross margin dollars. So growers have increased gross margin by 20%. Gross margin dollars by 20% from same time last year. They're moving. I mean, if you're growing it north of 15, you're really cooking. So they're doing really well. On the other hand, the decliners are down 14% in gross margin dollars. When you're down 14% in gross margin dollars, there are very few levers that are big enough to change profitability. It's just not there. And you'll see that kind of played out here as we kind of go through a couple other of the metrics that we saw in the model. So why are they down? Just like Mike mentioned, we're in a different environment. Demographic trends have changed. So you look at two things there: birth rates being down for 20 plus years. And you also look at immigration, and immigration's down. And so the marketplace is not growing. There's just not enough people in it participating, buying, putting all the interest rate game and everything else aside. Just not a large enough market compared to what it used to be from a consumer perspective. And it's going to continue to be that way. We don't see anything changing. Obviously birth rates, it takes 20 years to grow a human. So it takes a while for that one to change. The immigration could change, but I haven't heard a lot of talk about it. So you got to take market share. The second thing, and you guys that are simple numbers disciples, this one, what we're going to talk about next: labor efficiency. All right. So the growers have increased labor efficiency by 3%. They're 3% better at delivering on that 15%, or I'm sorry, 20% increase in gross margin dollars. So their teams have gotten better. When your business is growing, typically it will drag labor efficiency along. Just by necessity, you got to get it done because the next one's right there. You got to get it done. You got to move. Whenever you add administrative and management labor, you're growing fast enough to be able to absorb it. The decliners, on the other hand, are down 11% in labor efficiency. So, you've heard us talk in the past. This is your biggest lever when it comes to profitability inside the business. That lever is down 11% for declining companies in terms of gross margin dollars.
Well, I will say this, Brandon. One thing that's been happening on the calls is a lot of companies, at least that I know and work with and have talked to when they've called, have been reluctant to shed the labor. One is that they're worried about, especially depending on the industry you're in too, is finding that labor again, should there be any turn in the market. And so the question then becomes, hey, how long are you willing to tolerate lower profits and a hit on cash,
right,
to keep your labor? Because you're going to have to float it. And so the labor efficiency, I think for me, when I look at it and what I deal with, is less about people being unproductive and I get you're not holding the right amount of labor to gross margin, but at the same time, people just not wanting to have to, because it's expensive to rehire. Maybe you get a recruiter, maybe you waste time. And maybe you're in an industry where there's a special skill set that if you lose that person, you just don't find them walking around.
right.
And so that's I think that's a lot of it too.
It's a challenge. Yeah, I'll throw this out. And I want to come back to this question here in just a second. Here's the question. How much hope do you want to buy? Because every time you run payroll and you're not at the efficiency levels from a labor efficiency standpoint you should be at, you are buying hope that the market is going to change or that you're going to be able to do something to grow gross margin dollars.
Yep.
And we'll talk about how much hope you can buy here in just a second. But I think that's the question to kind of think about. The next one. Well, before I move on, one more thing on the labor. For the decliners, a lot of them are in a difficult situation because they have made those labor adjustments and they're running with a skeleton crew, but gross margin dollars continue to decline. So let's say you're a restaurant and you're likely seeing gross margin dollars decline. You got to have one person in the kitchen. You got to have one person out front. You got to have one person waiting tables. You got to have a minimum amount of labor just for the business to function and be open. And if margin dollars continue to decline and that labor's at a minimum, you can't use that lever anymore. And we'll get back to the lever you can pull here in just a second. All right, the third one, operating expense. So the ones that are in the growers bucket, growing gross margin by 20+%, they are, when you look at their OPEX as a percentage of margin, it's flat. So the insurance increases, the OPEX increases, the marketing increases, dues, subscriptions, licenses, all those things you got to have to operate as a business. They're growing 6 to 7% right now, just in general with inflation. They're able to keep that in check as they're growing. So they're not giving up ground. They're not giving up profit because their OPEX is growing. The decliners have seen OPEX as a percentage of revenue increase 2% over last year. Now, on the surface, 2% doesn't sound like a big deal. Well, if my gross margin dollars are declining and I've got a 2% increase in OPEX on top of a decline in labor efficiency, the only place that can absorb that 2% increase in OPEX is profit. It comes right off your bottom line. And so you talk about being in a pickle. That lever is usually pretty small in general in terms of, like as we said on the webinar last week, we're going to cut out satellite radio and save $30. There's just not enough dollars in there that are discretionary for most businesses to be able to make an impactful change.
Well, and what I'm concerned about too is a lot of the companies that I have worked with, talked to, had growth, like a lot of businesses, 22 to 23. That's GG's. 22 to 23, 23 to 24, even 24 to 25. Well, they kept investing in OPEX. And then what did they run into with just Brandon just said? Lost gross margin. Sales might have gone flat. And that expense picture, when you've been a machine, when you've added labor or maybe a location or two, it just doesn't shut off. Like you just don't like tomorrow be like, yeah, I'm cutting my utility bill in half, or oh, that building I signed a lease on, or some of these things that got moving because of growth. And now businesses are working on ways to unravel that or come back from it of going, oh my gosh, I've had growth the last couple years. And now all of a sudden that machine has come to a halt.
Right.
Or like Brandon said, they've been trying to buy hope and keep it going, thinking that, oh, it's going to turn. It's going to turn. And it's just not. And so that OpEx picture is a rough one right now.
So the last thing in terms of outlook, then we're going to talk about what do you do with this information? We're always looking for what we call a canary in the coal mine, something that's going to tell us the weather's breaking, the tide's turning, the lights at the end of the tunnel, whatever analogy you want to use. There were a couple of articles came out this past week in relation to outlook. One was in the Wall Street Journal that basically the author was of the belief that Washington has alignment around monetary policy, taxes, interest rates. You put those three forces together and it's going, because there is alignment, you're going to see increase in activity. Maybe, maybe not. I'm a skeptic by nature. So alignment and Washington just don't seem to go together with me. Now they may, but that's just me. The second was a survey around optimism for 2026, and it had increased from December to January. Once again, new year, usually there's optimism in the marketplace just because it's a new year. So I don't know that I fully buy that. It's a very emotional reading. Did you get those folks on a good day or a bad day? I just haven't seen any data, speaking of a canary in the coal mine, any data to tell us we're seeing activity increase. So one of the things we look for is commercial construction activity. It's a good data point because from that, so many things are able to spin off and get up and going. When you look at commercial construction activity, it has increased over the last year in dollars. But if you break that down, the true activity in terms of number of projects hasn't increased. The projects are just more expensive. Okay. So not as many projects, and we need quantity as well as the spend hand in hand. And secondly, I can't remember off the top of my head, but it is a staggering number, the percentage that are for data centers.
Oh yeah.
Okay. So that's a bubble. Anytime you've got one component of commercial construction that's just really, and data centers are that way right now. By the way, you talk about jobs that can be extremely profitable jobs if you're involved in any aspect of the construction cycle. Data center, the clients we have working in a data center, I mean, they are printing money on these jobs, right? Okay. Because it's not about it's not about how much it costs. It's about how quick can you do it. All right. Which means premium. So once that bubble pops, if we don't have, these other forces to get general construction up, and, that's a little concerning. The other things that we've looked at historically in the past have been marketing spends. We haven't seen marketing spends increase. I don't know how relative that is, of a canary in the coal mine, given the marketing industry and what all's been taking place there with change. But we just haven't seen, either anecdotally or in the raw data itself, anything to kind of suggest, all right, guys, it's time to play offense. Now, hopefully that changes, because I am tired of having calls about playing defense. Yes. It is much more fun to talk about growth and what we're going to do and when should we hire than we're falling in margin dollars and what do we do. But keep that in mind. So what do we do with this? Knowing that you got a divided economy, both in what you do as well as the size of company that you are, knowing that the outlook right now doesn't have a lot of strong data to suggest it's going to get better in the immediate future. What do you do? So back to those two buckets. If you're in your gross margin dollars are growing, you're in a growing environment, stay on the gas. We said earlier about markets not growing and taking market share. Find a way to take more market share. It is, when, as we say in the South, it's time to make hay, right? It is growing season. It is time for you to gain market share, to flex your muscle, to be creative with what you're offering, to get a competitive advantage, and make sure you communicate that. keep rolling. Still be cautious with the overhead and admin management hires. Now, I didn't say don't do them. I'm just saying be cautious about them, because we've got a list of folks who were in a growing market, and as Mike mentioned a moment ago, that market quit growing and they got kind of hung out to dry. So, stay on the gas on anything stupid, but you want to be, moderately aggressive in terms of moving forward. If you're a decliner, what do I do? So we said earlier, this concept around buying hope. The first thing we got to look at is, what kind of capital do you have inside your business? Because if you have capital, we have choices. If you don't have capital, we don't have choices. All right, so let's take the ones that don't have capital first. You can't buy hope anymore. You're out of cash. You're it's about to be game over. So the first thing I'm going to look at is, can I make any more adjustments with my labor? All right, because that's the quickest way to kind of stop the bleeding here. If the answer to that is yes, then I've got to go ahead and make them. I've got to quit buying hope. It may be painful. Replacing that person may be very difficult, but you don't have the cash to keep playing the game. So you got to go ahead and make that move. Simultaneously, you have got to revisit your competitive advantage and your messaging on the marketing side of the house. And I'm not a marketing guy, so here's what we mean by messaging. How you communicate that competitive advantage to the marketplace. If you do not have a solid and compelling reason why someone should buy from you versus someone else, or why they should buy when they really don't have the cash to be making that decision, you're going to be in trouble. And this is, we talked last week, a little bit about marketing on here. This is one of the pitfalls that was mentioned. Folks are just not doing a very good job of that. So I have got to double down efforts. What is that going to require? It's going to require you as the entrepreneur rolling up your sleeves and getting your hands dirty. You have got to get back into the game if you're not, and start leading the charge on that. The team, they want to keep their job. Don't get me wrong. But if the business goes down, they have some bumps in the road, they keep rolling. As the entrepreneur, most of the time, if the business goes down, we got a really much larger issue. There are many more things on the line for you than your team. So you've got to get into the game and lead the charge from the front. Mike, thoughts on that for those that are declining?
Yeah, I like always remember our simple numbers playbook, assess market conditions, clear distortions, eliminate any low value or loss activities, get to profitability fast.
Yeah.
That way you can build up some capital and then decide from there what play you will run. That is the way if you're declining right now. And you got to do it, but that is the way.
Now, if you have cash, second part of the decliners, I might be in a declining marketplace, but I have some cash. What do I do? It's good to have choices. On the other hand, you can also waste a lot of money, as we said, buy hope. So this is the conversation around, what do I keep buying hope? The first thing is that we need to set a line in the sand at which time you will stop buying hope.
Yep.
Okay. And that's usually a cash balance. We always strive to have the 2-month core capital. If you start to go below the 1-month level, your days of buying hope are over. Okay. So you can kind of monitor that and go, all right, we're a month and a half. We're still okay. And once again, I don't want to just throw it out, but if I'm taking that approach, I'm going to hang on to the team, keep pushing, keep trying. I said, I got to determine the line in the sand, and I don't like for it to be less than a month in most situations. And I've got to have something in my outlook that tells me that it is about to get better. And when I say something in my outlook, that goes beyond my sales team telling me, oh, there's plenty in the hopper. This big deal's about to close. This is going to, if they've got a track record of that really taking place and you're tracking your days to close and you can believe it, great. But if not, it's hope. Really turn the screws on the accuracy of that forecasting and what's real and what's just a pipe dream. And if there is activity truly coming up and you're about to get some things signed or some deals closed and it's about to roll, okay, we can maybe extend that and be a little more flexible. But, you got to be very honest. And this is a time, once again, to have that candid conversation with your team around. I'm not wanting you to sugarcoat it. I need to know really and truly, what do we got upcoming for the next 3 months? If you're in a marketplace where you don't know that answer because it's retail or restaurant or some of those kind of things, I got to look at the same time last year. What was taking place this time last year? As a matter of fact, I had a call on Friday with a client. It's hard to predict what they're going to sell next week. Well, I know this much. They're down 12 to 15%, pretty steady from last year. So it's a pretty safe estimate. They're going to be down 12 to 20 or 15% this year unless something changes. And then the same thing for the ones who don't have cash. I've got to go and steal market share. Those things apply. So hopefully there's a few tips, things and what have you. Obviously we work with clients on this all day, every day. So if you find yourself in one of those situations and kind of like, all right, I just need somebody to take another look, that's what we're here for. We can definitely do that.
Hey, and remember, if you are uncertain, there is nothing wrong with holding that cash, waiting, building it up, and be ready to make a strategic swing when the time is right. Like sometimes, you feel you always got to do something, but if there is no growth and the outlook is maybe very difficult for your industry and you're not comfortable with your bet, sometimes it's like, hey, because you're going to have businesses, Brandon knows this, that are in your industry, that are competitors, that are going to be doing some dumb stuff.
Yep.
And it's important that you let them and be ready to be strategic with that use of money. And there is nothing wrong with being like, hey, right now we're cruising at profitability. It's not, the growth isn't crazy, but man, that bank account looks great. And we're able to maintain it. And then wait, and then bam, take your swing and maybe hit a nice double.
Yeah. And there's nothing wrong with the walk.
Right,
to score a run, you got to get on base.
Yeah.
Right. So one last reminder, Simple Number Summit. We started at the beginning of the call. Go to simplenumbersummit.com. That's got all the details on it. We're still working on, finalizing of the agendas and the schedules. It's not till November, so we're putting all that in place now. But as Mike said, we have been a little surprised in a good way at the interest and the activity and the folks looking to sign up. We don't have unlimited room for that. So if you think you want to go, and we did our best to make it as affordable as possible, go out there and sign up. Go ahead and reserve your spot November 9th through 11th. It's going to be in Austin, Texas. It's going to be a great time. So one you don't want to miss.
Hey, and for businesses out there, sponsorship opportunities are available. Booth space is available. Again, it's going to be limited, so please reach out to us. I will not be tattooing your logo on me. So it's gonna be limited space. Brandon's head though.
If the price is right, we can talk about it.
There you go. Or at least paint it. Right?
We can come up with something. Spot. Yeah, we can come up with something there. We gotta. But once again, the price gonna be right on that. So
yeah.
Cool deal.
All right, everyone. Well, we appreciate you. We'll catch you next week. And for Brandon, I'm Mike, and y'all have a good one.
See y'all.
If you want to know more about driving sustainable profitability for your business or are interested in learning more about CRI Simple Numbers, please visit our website at simplenumberscri.com. Thanks for listening to this episode of Profitability Playbook, the Simple Numbers Podcast. You can subscribe to Profitability Playbook on Spotify, Apple Podcasts, or wherever you prefer to listen to podcasts. If you like what you heard today, please leave us a review. This podcast is brought to you by CRI Simple Numbers LLC, a division of CRI Capital Group LLC, and a subsidiary of CRI Advisors LLC. CRI is the trusted brand under which Carr, Riggs & Ingram LLC, the CPA firm, and CRI Advisors LLC, along with its subsidiaries, deliver professional services. Please note, Carr, Riggs & Ingram LLC is a licensed independent CPA firm offering attest services, whereas CRI Advisors LLC and its subsidiaries specialize in providing tax and business consulting services. These entities operate within an alternative practice structure as defined by the AICPA Code of Professional Conduct and comply fully with applicable laws, regulations, and professional standards. Ready to simplify your business finances and drive growth? Explore valuable resources, books, and tools designed for entrepreneurs and small businesses at simplenumberscri.com.